All right, let me know if you can hear me in the chat. Oops, sorry. Let me know if you can hear me. Having some issues with my YouTube, but we should be good. We should be good to go. So let me know if you can hear me in the chat. All right, do this, do this. Okay. All right. So for today's session, we are going to do a deep dive into what happened today. And we're also going to do a recap of the best trade for the week. So what was the best trade for the week? How did we execute? What was the return? What was the entry model? What was our methodology? And what was the overall premise behind what we were doing? And if you guys have been attending these live streams as of late, you guys know the premise. The premise is we want to take advantage of, well, the not so good traders, right? The ones that get trapped. We have to take their liquidity. We have to take their cash. We have to trade against the trapped traders, the people that trade an opinion and that trade in their personal perspective. Instead of trading the structures of the charts, we want to do the opposite of them. So as always, let's go into the Substack for today. Today is October 17th. As you guys know, with me, there is zero hindsight in my trading. Zero. Everything that I write about in the pre-market is traded during regular trading hours. I create my trade plan and I do my analysis in the pre-market. If you guys are following anybody on social media and they don't do this, if they don't have a trading process, then they are not traders, right? You need a process, you need a blueprint, you need a plan, or you should not be entering the market. That's what I firmly believe, and that's what any professional trader would agree with. What's going on, Angel? I see you in the chat. In the chat, I also posted the Substack for today in the pre-market. This is, of course, with futures. The most beautiful thing that we love about futures is that we have fixed risks, and we can also apply a very consistent process to rinse and repeat the routine every single day, right? This helps limit our emotions, and it helps retain our trading psychology. So let's go ahead and jump into the Substack today. Then we're going to jump into the chart, and then we're going to jump into the Discord, show you guys how I executed today. We're going to also talk about the best trade of the week, and then we're just going to wrap it up, do our usual team meeting. Once again, thank you so much for tuning in. So grateful for all of the viewers. I just hit 100 subscribers. That's so awesome. It's so awesome to me. I have real passion for this game. Real passion for this game is going to carry you a far way. And all of the work that I put in every single day, it's a decent amount of work, but it is work that I love to do. So I'm so grateful. I'm so humbled under the chart and you guys. Let's go ahead and jump into the nitty-gritty of it. Let's talk about today's analysis. So our bias remained neutral. For day trading today, our bias is neutral. And the neutral bias is important. And there's also some external context that we have to think about today going into the weekend. So let's go ahead and talk about it. Number one, trend or range. Expecting a range day today as price action sold off overnight. And we now have a 200-point range if we combine yesterday's RTH range plus today's overnights. That being said, the overnight selling was caused by external context. If external context is to return today, and if the overnight low plus last Friday's low breaks down, we can enter a trend day down. So today will be tricky. And as I said yesterday, earlier in the week provided easier setups. For today, we have to stay on our toes in case external context, which is headlines, return, but for the most part, expecting price to remain neutral because of the overnight bounce and close as an inside week. So for the most part, our bias today can remain neutral so long as price action is stuck within the previous day's range and the overnight range. A breakout above the previous day's high flips the chart bullish, and a breakdown below the previous day's low or the overnight low will flip the charts very bearish, right? Let's talk about the structure. So the overview is that overnight we dipped into Tuesday's low, 65.9325, and printed a false breakdown. Bulls have successfully defended the macro daily higher low pattern, and we are back to yesterday's low. Holding above yesterday's low will be key as buyers try to keep the bias neutral. Remember, all of this is in the pre-market. All of this is before we get RTH to play out, right? Let's continue reading. So the bull focus for today, for buyers, it's all about sustaining price within the overnight range. Even better if they can sustain price above the prior day's low, which got recovered overnight via the false breakdown of last Tuesday's low around 5 a.m. 66.11 through 66.2375 will take the spotlight today. And hugging yesterday's close will be healthy for buyers to continue higher into yesterday's range high balance. The failure of 66.11 through 66.2375 can result in the chart flipping bearish, in which the overnight low must print a false breakdown. Below that, last Friday's low comes into play, and this is a macro support that must hold or we liquidate hard below. 66.80 through 66.9275 is significant resistance, in which breaking out will be a great bullish indication, and the better resistances are at yesterday's high. In order to get towards yesterday's high, bulls would prefer to hold price above 66.5325 through 66.7175 or 66.11 through 66.2375. So when you look at this chart in the pre-market, we're saying to ourselves for the bull focus today, if we're going to get to the range high balance, then buyers must do two things. They must defend above the FOMC low 66.11 through 66.23, and the prior day's low is right here, or they must defend above the most aggressive support on the chart, which aligns with all of this structure from yesterday at 66.5325 through 66.6175. And trust me, guys, these market structures will not lie to you. They will show you the narrative, and it's your job to not have an ego. It's your job to not have an opinion, and it's your job to align with the narrative. You don't align with the narrative, you will never become pro. That's simply what I truly believe. The bear focus for today. For bears today, we are retracing yesterday's range off of recovery of Tuesday's low. So false breakdown overnight. And a larger, more macro recovery of yesterday's low, 66.32. This means that the retracements must hold as buying pressure may become exhausted into key resistances. 66.80 through 66.9275 is the immediate resistance within yesterday's range, followed by 67.1975 through 67.2925, plus 67.4150 through 67.4725. So you can see how I'm using the market structures here to dictate the bias, and the bias is giving me an edge. The bias is giving me an advantage in order to align with who's trapped and who's in control, right? When the market structures, based on which market structures are holding or failing, that's going to dictate that ideology, and that's going to give me the best risk to reward setups. Holding below 66.80 through 66.9275 will showcase strength from sellers, in which we can try to break down below 66.32, yesterday's low, in the 66.11 through 66.2375 support zone. I'm expecting liquidation below, in which the overnight low can get run over easily via volatility. Last Friday's low would then take the spotlight. So for bears today, holding 66.80 through 66.9275 is an absolute must, and if they cannot hold this immediate resistance and bulls break out into the range high resistance, we're expecting price action to not return to the overnight range, right? Because at this point, too many sellers would be trapped, and at this point, too many strong resistances will be, or excuse me, strong supports will be established, because technical analysis 101, each resistance broken flips into support, and vice versa. Broken support flips into resistance, right? So how do you formulate a trade plan now based on all of those notes? That's high quality notes, right? Extremely quality, because what am I doing when I'm writing those notes? I don't have an opinion. I don't have a perspective. My brain is off. I'm simply analyzing the market structures on the charts to give me the narrative of that chart. And if I'm not aligning with the narrative of that chart, I'm simply gambling whatever the hell I'm doing in the stock market, right? So it's so incredibly important. This is what I truly believe in. And it's just price action, right? Price action will tell you what you need to know. Everything else is complete and utter noise. Formulating a trade plan. Our contextual bias intraday is neutral. Here's my trade plan that I wrote up today in the pre-market. And this is, by the way, completely free for everybody. This is not premium content. This is completely free for everybody in the pre-market. And I do this every single day for futures. First of all, as I said yesterday, the easiest setups for the week have passed, and yesterday plus today are naturally going to be trickier because nothing is extremely fresh anymore. Today is also OPEX day, so options expiry, in which we can produce extreme traps. Then we also have to keep in mind the potential for headlines. That being said, the actionable setups for today will remain at the opposite ends of the balance, because as the chart remains range bound, we have to fade the edges and not get trapped in the middle. The bias is neutral, so expect traps with both sides being active until someone truly gets run over. In order for sellers to be strong today, as outlined in the bear focus, 66.80 through 66.92.75 is a must hold, which aligns with a basic retracement of yesterday plus the overnight range. Above here showcases strength from buyers. Sellers do not want to see price back in the previous day's highs. I don't mind risking my points, especially considering that buyers have moved price in a straight line into it since 4 a.m. So that zone that we're talking about is 66.80 through 66.92.75. And then I'm going to jump into the Discord and show you guys the live execution. Long todays can be tricky, and for sure keep in the back of your mind volatility from a headline. Read price plus the watch list. I also like short in the 67.1975 through 67.29.25 zone plus the 67.4150 through 67.47.25 zone, but I will be applying the false breakout entry model here / Fibonacci trap. The last trade idea for today is the bull focus outlined above, which is 66.11 through 66.23.75, being core support to sustain the overnight false breakdown. One can place a bid here because off of the failure, we could have trapped buyers for a move into last Friday's low, in which the swing idea comes into play. And then we discuss the most important support structures and resistance structures right below. So now let's go into the chart. Let's talk about real-time execution and what happened today. So first of all, the number one thing that we outlined in the bull focus was that 66.53 through 66.61.75 or 66.11 through 66.23.75 must hold if we're going to get a breakout attempt above 66.80 through 66.92.75. If I go to the Discord now and show you guys how we executed, the bot today was only active at the resistance idea, the short idea. Why? Because in my trade plan, I noted that I wanted to take advantage of 66.11 through 66.23.75, and we simply just did not get there today. So there is no actionable long from my trade plan that I'm going to execute. If there's a long that I'm executing and it's not in my trade plan, that's pure FOMO, or it's a real-time read, which is not a decent long that I see today unless you were extremely aggressive and you long the VWAP and you long the first hour low at the prior day's low, which is a decent opportunity, I guess. Let's go to the Discord and show you guys how we executed. So the bot called out resistance today. The bot said that 66.80 through 66.92.75 is active short and we must apply the entry models. Following the bot call out, I immediately said to watch for a false breakout. The first test reaction has already played out and there are better resistances above. And what I mean by the first test reaction has already played out is this wick right here. This wick at 9:45 a.m. already went zone to zone, right? Anybody that bought 66.80 on first test already got paid off of a zone to zone risk management methodology. And that's completely fine. But once price action gets back to the area a second time and sellers were unable to push their advantage on the first test of this resistance, I need more confirmation before I enter shorts, right? And by the way, we're also doing this live in the Discord during our RTH live stream. I will be posting the live stream on YouTube later today, so stay tuned for the recording of the regular trading hours live stream that we did in the Discord. So as we continue onwards here at 10:24 a.m., I said one can wait for the Fibonacci trap. It would make sense. I will send it out for prints, or you can be aggressive and market below 6680 via a false breakout. It's a very classic entry model: false breakout, false breakdown, enter into the chart once the pattern presents itself. And the pattern definitely did present itself because we rejected the opposite side of the zone, 66.92.75, sellers showcasing that they're active here, and all we needed was price action to go below 66.80 and confirm a potential false breakouts before we marketed in shorts. And that's exactly what's happened, right? We caught this in the live stream. We caught this short entry around 66.80. And then we ended up hitting our first target, which is zone to zone at 66.61.75, right? And that's all for today, because unfortunately, if we go back to price, we ended up bouncing off of the first hour low. And I also talked about this in the live stream today. The first hour range is incredibly significant to intraday price action. If you're ignoring the first hour range, then you're ignoring extremely important levels. The first hour range is right here. It's 66.41.50. That's the 9:30 a.m. low versus the 66.97.50, 10:15 a.m. high. And the reason why the first hour of the day is incredibly significant is because the first hour of the day in the New York Stock Exchange is when the most money is being fluctuated. That's why when I look back at my journal, the best setups took place in the first hour of the day. It makes a lot of sense. And as we go out through, as price action does its routine throughout the rest of the day, it could get very choppy and trappy. But anyways, the first hour range is incredibly significant. Why? Because the context behind the levels and the structures that the levels are presented at is not coincidence. The 9:30 a.m. low is in alignment with the prior day's low, and buyers are doing their absolute best to hold price above the prior day's low. Because if price action is unable to hold above the prior day's low, which is recovered, now we're going to get the same situation that happened on Wednesday, which is a trapped buyer's scenario for a liquidation to commence. So it's literally the exact same structure here, right? It's the exact same thing. And we have to align with the narrative. But in this case, buyers were successful in defending the prior day's low. Buyers did not fail, and we did not start to liquidate. Buyers defended it, and obviously options expiry and chop has something to do with this, because volatility is lackluster here. When we defend at 11:30 a.m., we defend the first hour low. The first hour low is defending the prior day's low, and we eventually break out above resistance, although it took the entire day to do it. Once again, the external context of OPEX made it such that it took the entire day for price action to get going, right? So you can see the significance here. Vice versa, let's say hypothetically the first hour low broke down. Then the short that we took at 66.80, that opens the door for some phenomenal risk to reward, because then we go from zone to zone to manage our risk. So we're essentially risk-free. We're pretty much risk-free in this trade. But if we get a trapped buyer's situation and we flush out the first hour low, we break down below the prior day's low, now it's the exact same situation as Wednesday, and we can start to liquidate lower. Unfortunately, the market just was not volatile enough to get this situation to play out, and that's completely fine, right? You're not going to get the best case scenarios every single day, like how we got the best case scenario on Wednesday. It's completely fine, right? And I saw some traders in the Discord today, they actually used the first hour low as a target, which is completely fine as well. We talked about that in the RTH live stream, that I wouldn't argue with anybody if they took a target at the VWAP or if they took a target at the first hour low. Definitely a good target to take. I think though that the best case scenario situation of a trapped buyer situation is what I would play for, and that's definitely what I did play for. Right? Extending the targets, be hopeful in this trade because you're aligning with a potential situation of trapped buyers. Either buyers get trapped or they don't. And if they do get trapped, well, guess what? You're going to get paid hard. And that's exactly what happened on Wednesday. Unfortunately, buyers did not get trapped. They held the structure. They held price above the prior day's low. That's exactly what we noted in the analysis. And then they broke out above the first hour high, which is the resistance that we noted today, that if buyers were going to break out the resistance at 66.80 through 66.93, then we had to hold 66.53 through 66.61 or 66.11 through 66.23. And the fact that this lower zone did not get tested showcases definitely a lot of strength from buyers, in which we eventually broke out. So that's today in a nutshell. That's today completely completed. We also collected some puts, the October 17th expiry. We collected some premium that we sold on those puts. So all in all, it's a very easy week. In my opinion, very easy week. I talked about nonstop today and yesterday that our goal is primarily to protect the profit that we made on Tuesday and Wednesday, right? And that transitions into our next topic, which is what is the best trade for the day? So let's go, or excuse me, the best trade for the week. Let's go into the website here at Substack, tradingwarz.substack.com. Link is in the chat. And let's go to the pre-market analysis for Wednesday. So Wednesday was the 15th. And let's open up the after hours analysis here. So this is October 15th. The best trade of the week was on October 15th. And our short setup was shorts on first test of macro resistance, right? So if you guys want to recap for what happened today, we've concluded the recap for today, and now we're jumping into the best trade for this week. And we're going to do a recap of what happened on Wednesday. And that produced a phenomenal 10 out of 10. It's more than an A plus trade. I would call this an A plus plus trade idea, regardless if it worked out or not, right? Sometimes an A plus plus trade idea doesn't work out. It is what it is. But an A plus plus trade idea, it's time to load up, and it's time to have heavy conviction, and it's time to get going. So the execution here was very simple. We had short 67.60.75, stop loss behind the zone 67.74, and our targets were extended. The first one was zone to zone, but our second was the gap fill, extended targets, and a runner was left active, right, until the close. So here was the trade plan for Wednesday, October 15th. We're going to skip this and we're going to go to the setup. I want to take advantage of the latter most significant breakdown trigger on the charts, which is 67.60.75 through 67.72.50. If you're confused on what a breakdown trigger is, definitely watch the previous live streams that we've done here on YouTube. I go into a deep dive on why 67.60 through 67.72 is the most significant resistance on the charts. But essentially, this level, this zone, was the first breakdown trigger for last Friday's flash crash. So this was the first support that needed to fail in order to get liquidation going, right? So that's why it's so significant. The predetermined entry model, or the false breakouts of last Thursday's low, 67.60.75, both make a lot of sense for execution. So last Thursday's low was the first support of significance that needed to fail in order to get liquidation, which is what happened last Friday. Let's read through the Discord notes here. So here's the first Discord post. 10:07 a.m., the bot calls out that 67.60.75 through 67.72.50 is active short. So it's pretty much the exact same trade setup from today. It's the exact same thing, just a little bit different context, different day, right? Good luck for those of us trying the predetermined entry model, stop loss behind 67.72.50, zone to zone risk management. Other than that, watch for a false breakout of last Thursday's low, 67.60.75. And then I quickly followed that up with a potential false breakout. Market in looks good too. Let's see, good luck, because we got this wick right here. So definitely look like sellers were active. And regardless, it was the best resistance on the chart. So we didn't need much conviction here. We didn't need much confirmation here because our conviction was good. So the bot calls it out at 10:07 a.m. Let's continue. 11:20 a.m., 67.41, our first target gets hit. And you can see on the chart right here, our first target was the essential middle part of the intraday range, and it was also significant resistance that failed, so we want to take a target there. Phenomenal targets, right? And then I followed this up by saying we're going to start extending our targets today. We have to extend our targets. The reason for extending targets for better risk to reward is because if buyers get trapped post 24 hours of nothing but up since yesterday morning, we can really start to liquidate. Remember, this is just range bound trading within last Friday's range. We must zoom out always. So this sentence here gives us extra edge because we're anticipating the chart to remain range bound within last Friday's range. So a rejection at the highs makes a lot of sense. Buyers get trapped below the previous day's high, which can result in a false breakout pattern. The 67.40 broken resistance was a 10 out of 10 spot to scale out now. We just need to let the chart play out for the rest of the day, either a new low of day or a new high of day, and they both mean a ton to the internal context. Thanks for playing the game. I'll be back if something happens. And something did indeed happen because we started to liquidate. We started to break down below the previous day's high. This printed a false breakout of the previous day's high, and we got the 66.86 target number 2 gap fill hit. So extending the target literally means I'm going to be skipping this zone right here, and I'm extending my target to the next zone below, anticipating a liquidation event off of trapped buyers for even better risk to reward. And once we hit that target, we're pretty much done for the day. The runner is left on, and the swing trade was self-explanatory. The swing trade is the exact same trade, just a wider stop loss and a much more extended target, right? That made a lot of sense. So when we go to the chart now and we look at what happened, the chart from Wednesday is right here. So this is where we shorted on Wednesday. We shorted the high of the week. And by the way, we also longed the low of the week at the time down here. Then we got a false breakdown overnight. But anyways, we shorted the high of the week over here. Risk management is extremely simple. We ended up extending the targets because we were anticipating trapped buyers right here. That's exactly what happened. So instead of taking another target in this zone, we extended it to the next zone, which housed the gap fill, and that was a great place to take another target. For my beautiful swing traders, you guys got paid, and you only needed to press one button today, or excuse me, this week, which is very nice. The only swing trade idea that we had executed was up here. This was macro resistance, of course. And if I go to the 8-hour time frame for our swing trade ideas, this is how we looked, right? So this, just connect the dots. This is macro resistance, first breakdown trigger from last Friday. We shorted the highs. We tightened our stop loss to Wednesday's high. Wednesday's high did not get crossed. We hit our first target in the first zone-to-zone risk management. And then from there, we did not hit the next target, which would have been at last Friday's low. If you guys are swinging this short over the weekend, you should have managed your risk already. You should have scaled out already. So nobody should be holding a full-sized position over the weekend. We had a ton of opportunity to scale out the short from Wednesday if you were swinging it. And you should be fairly comfortable with holding a 25% or even a 50% sized position over the weekend. But obviously, it should just be a 25% sized position over the weekend. And then we'll see what happens next week. Thank you guys so much for tuning in. That's a recap of the best trade from this week, all presented in the Substack and, of course, executed live in the Discord. And if you guys need the Substack, it's completely free, right? All of my pre-market analysis is taking place in there. All of the premium harvesting is taking place in the Substack. And, of course, we have a ton of educational content, right? If you want to learn how we shorted the highs with heavy conviction, you have to go ahead and jump into that Substack. And if you need help with execution, we're in the Tradingwarz Discord every single day, trying to just be of value to our members, right? And for me personally, it's an easy week, right? This is the best environment for me personally to trade because I understand the significance of the levels that I'm trading at. For example, clicking short at Wednesday was incredibly easy. Clicking long on Tuesday was incredibly easy because I know the significance of the levels that are in play here, the location in which you're entering the chart. Thanks for the week. Lots of learning. Yes, lots of learning. Phenomenal week. One of those weeks where you want to look back and study, study, study. You want to review what happened. Obviously, we need to journal every day, but this week takes the spotlight as this week was extremely loaded to the brim with education. Whenever volatility is at highs, whenever we're printing 100-point ranges, you're going to get these patterns to play out very quickly. And whenever patterns are playing out quickly, you can learn a lot, literally just because things are not happening in slow motion like last week. So come into the week with a good mindset and come into your review with a good mindset as well, because there's so much to be learned. Extremely profitable week for us in Tradingwarz, extremely profitable with the put selling, and extremely profitable with futures as well. We got some banger trades. Today was essentially a break-even trade, which is all good because if buyers did indeed get trapped today, it would have been another 3 to 5 hour trade, right? Which is nuts. To have back to back 3 to 5 hour trades, you don't see that in a week. It's very good. It's very phenomenal. Thank you guys so much for listening. Let's go ahead and talk about what can happen next week. First of all, we were talking about the week closing as an inside week for multiple days now, and that has confirmed, right? We closed with an inside week. This inside week is incredibly significant. And we have an outside bar followed by an inside bar, and that's important too. The last time we saw this pattern was at the end of July into August. We ended up running, and then we had it in the middle of April and we started running, right? So this is a very powerful pattern simply because it's showcasing to you that the market is in extreme volatility. You don't get an outside bar followed by an inside bar on the weekly chart that much, right? It's very rare. It's uncommon. So the market is in a predicament. Let's see what happens. Let's go back to the macro time frame. That's the bigger picture. To put it simply, right, we just have to keep it simple. Buyers above this week's high, sellers below this week's low. I think that's pretty much all of the analysis that you need to do from a macro / bigger picture perspective. Sellers above the high and buyers above the high and sellers below the low. It's important to understand though that in order for a support to turn into resistance, it must be broken. It cannot print a false breakdown. So for example, if next week we can test the macro support down here at 6509.75 through 6540.25, but we don't get this, right? We don't get this to happen, and we instead get this, then obviously sellers have failed in breaking down the structure. And it's not as bearish as we thought, right? False breakdowns and false breakouts happen all the time because the market is just a machine for liquidity. That's it. It wants to trap you. That's its goal. That's why it exists. These candles exist to get you trapped. So that's why we have to trade against the trapped traders. We have to align with the narrative and manage our risk very well, especially in an environment like this. You're getting 100, 200 point whipsaw ranges. You have to manage your risk well. You're going to have a lot of hindsight, right? Because if you catch a 100 point trade and it gets reversed on you on the next day, that's tough, right? That's tough. Alrighty, guys. Thank you guys so much for listening. Again, the Substack links are posted in the chat. This weekend, I'm going to have to do a full adjustment on my charts, right? I have to update my charts based on what happened this week. Just as a very quick shout out, I saw a member in the Discord today take this trade, and I do want to draw it up because it was a phenomenal 10 out of 10 trade. Shout out to you if you're in the chat. So he used this fib to give you an indication of the trend, and then he used Tuesday's low, which is right there, as confirmation for trapped sellers via the 618 fib and the false breakdown of Tuesday's RT8, this is the Tuesday overnight low, the 2 a.m. Tuesday low. So if you're in the chat, shout out to you. I saw you posting this trade. Execution, great stuff. This is a 10 out of 10 phenomenal long. Great stuff. Well played. Alrighty, guys. Thank you guys so much for tuning in. I'm going to go ahead and post the RTH live stream that we did this morning on my YouTube here. And thank you so much for 100 subscribers. I'm going to be doing these team meetings every single day, regardless if I'm sick, if I don't feel good. I will be here because that is my duty, and that is what I have committed to. I have committed to you guys, just like how you guys have committed to us. And we're extremely grateful. We're extremely proud to just participate in the greatest game on this planet, right? Trading is the greatest game in the world, period. Nothing will give you freedom like trading, and nothing will show you who you truly are like trading, right? It's one of the greatest things on the planet, right? And if you're somebody that's struggling, we're going to be here for you, just like you guys are here for us. And we're going to make sure that everybody is in a healthy and positive mindset. Healthy, especially because a lot of people develop serious issues from trading. And that's what we want to ignore at all cost. At the end of the day, we said this yesterday, it's just cash. At the end of the day, it's not that serious. There's more serious things in your life than the stock market, honestly. Your mind, your body, your family, your friends, and your mental health. They are all way more important than the game. That being said, we're still going to dedicate ourselves to the game because that's what's required to be successful. And we're still going to try to be better every single day. That's what these team meetings are for. So smell the roses. Have a beautiful weekend. Today's live stream really is just about recapping what happened earlier in the week because the external context took the spotlight today and we got a very choppy, a very uneventful day, which is what we talked about in the pre-market. Very uneventful day, but that's totally fine because the only people that are very active on a day like today are the gamblers, right? They want to get some cash before the weekend or they want to revenge trade, whatever, right? Obviously, the best trades were on Tuesday and Wednesday because the levels were fresh. The levels were completely fresh. And today is one of those days where you don't want to overtrade and you want to protect yourself, regardless if you're profitable or you're unprofitable for the week. Thank you guys so much for listening. Please stay tuned for the weekend report. I have to adapt and adjust all of my levels because we have a whole week worth here of new structure that I have to analyze. So I will be going through everything that happened this week and I will be drawing up my new levels and we will be posting it in the weekend report. And of course, we'll be talking about some stocks too. We'll be talking about the SPY chart. We'll be doing a deep dive into everything that we do in Tradingwarz over the weekend. So please stay tuned for the Substack. We'll try our best to get it out on Saturday. Have a beautiful weekend. Tradingwarz.com if you need anything. And if you need a one-on-one with me, these one-on-ones are primarily designed to keep ourselves accountable and they're private sessions, right? So if you have anything that you don't really want to share to the public, but you don't mind sharing it to Rich or myself, and you believe that you can gain some value from us if you share your story, then definitely reach out for a one-on-one. We are here to make each other better, right? And I say this all the time. I would have given up trading a long time ago if it wasn't for my community. So shout out to you guys. Shout out to you guys for being amazing and always participating with a positive and healthy mindset. Have a good weekend. I will see you next time.